towards $1 billion revenue.
Perfect.
And as far the margin is concerned, we are consolidating our position, not only in terms of the revenue, but also from the margin. And as Chairman Sir is keep guiding us always and keep telling us that in the good olden days, we reach up to the 19% margin levels. So we are aiming for that.
But that you would say is more like a FY27 kind of a number, or can it come faster?
I think it can come faster also. If the way we are going, things remain continue.
Understood. Lastly, sir, on the working capital, are you seeing any escalation in terms of debtor days or working capital for this particular quarter?
No, Subhadeep, we are trying to reduce it quite this thing. Basically, you need to understand my debtors composition. In my debtor composition, there is around 100 crore rupees number, which is lying with the utilities as the retention money, which basically always comes after the project is completed. So it is basically money which is not due. But my Indus doesn't allow me to separate it. That is the reason I have to keep it into the debtors. Right. So that's the reason you will find this always into there. And as far as debtor is concerned, please do understand that when I am supplying to utilities, I have the delivery terms on the FOR basis, and my payment is due when the material is reaches there and accepted by the utilities. And on an average basis, every utility selling time is around 30 to 35 days. So this major components, if you remove it, my debtor cycle is very less. If you see my industrial customers, almost all of my industrial customers, either on the LC basis or on the vendor financing basis or on the advance basis. So as I have been guiding in all of my these things, that in by next year we have a target of around 120 days working capital cycle, and we are working on those directions.
Understood.
And that is probably the best working capital cycle for capital goods industry.
Perfect. Just one last bit on potential acquisitions. You did allude to acquisitions possible on the CRGO side and the bushing side, as Chairman Sir was saying. Are there any other acquisitions that are on the anvil or any plans that you can throw light on?
No, the bushing is concerned, we are not doing acquisition. We are taking up the entire new facility. We are basically tying up the existing manufacturer who has got the expertise of the technology and machinery. So is providing entire know-how, technology and machines to us and helping us to setting up the unit here itself. So it's going to be the complete new facility for us. CRGO is what we are talking about, processing unit. Yes, we are into the very, very advanced stage. We have already signed the term sheet with the target company, and pretty soon, as soon as probably next week, we will be announcing it, this acquisition. Apart from this, we are working on a very advanced stage on inorganic acquisition. MOU has been signed on that also, and probably in this month or early next month, that will also be completed.
Understood. Thank you so much. That's it from my side.
Thanks.
Thank you. The next question is from the line of Gunjan Kabra from Niveshaay Investment Advisors. Please go ahead.
Thank you so much for the opportunity and congratulations for a very, very good set of numbers. So just I'll just complete the two questions. With respect to the demand and supply mismatch that is there, so right now demand is huge, but you're seeing that the top players, if I count like top 10, 12 players, including ours, the capacity that is coming up in the market is around maybe say 70,000 MVA. So how are we seeing in terms of the new capacity that's coming up with respect to demand?
Gunjan, I think the same question you had asked me in last quarter also, and I had replied you this question also. See, we don't foresee any overcapacity coming in next 2 or 3 years now. And just now that Chairman Sir, when he was addressing to the export issue also, he said is that right now there is no dearth of orders for anybody. There are ample amount of the order is available for every transformer manufacturer, and we are also working on that level. You can see that right now I have 18,000, 19,000 crore rupees of inquiries pipeline, and every day inquiries are flowing up. So that's not the constraint at all, and capacity expansion is not coming so soon. As we are the established player, we have the expertise, we have the manpower, everything. To set up a 15,000 MVA, we are taking 8 to 9 months time. So you can imagine for the new capacity people how difficult it will be. And apart from that, getting the right suitable manpower is going to be the more difficult for those people.
Okay. And second is, you answered a lot of questions on exports. So here I wanted to understand that in the beginning when Sir said that we are doing tie-ups with the oil and gas and electric arc transformers, special duty transformers is what we are focusing on exports. So here in, the energy transition which is happening, because of that, the demand for power. So are we focusing on that side also in terms of, because there is huge expenditure that is being done in the US, Europe and Africa as well. So are we focusing on the export market on the power transformers as well?
Yes, Chairman Sir has addressed that issue also. And what the oil and other segment what Chairman Sir has addressed, it is very recently our Chairman and our MD both have visited with our entire delegation to the European market to meet the big giant customers of Europe, and who are the major customers and major name into the world. So these are from these sectors, and we are working with the strategic tie-up or strategic relationship with them to have the orders from them. So this is the area which we want to target it. Apart from the power transformer, as Chairman Sir has mentioned already, I think you missed out that yes, we are tying up, we are looking for US also, we are looking for Europe also, and in terms of the all kind of the transformers, which is of our expertise.
So what will be the margins on the export side versus the domestic?
I would not like to disclose that here.
Okay. Okay, I'll come back in the queue. Thank you so much for answering.
Thank you. The next question is from the line of Dhruv Agrawal from Nivesh Investment Advisors. Please go ahead.
Yes. Is it audible? Hello.
Yes.
Yeah. Congratulations on the very good set of numbers, sir. Sir, most of my queries have been answered, but still I have a few questions, sir. Firstly, as you have adding up this new facility of 15,000 MVA, which will start commercial production from January 2025. By when can we expect to reach the maximum capacity utilization? And you are targeting to be 100% backward integrated organization by Q1 FY26. Would you like to revise your EBITDA margin guidance in near term, sir?
Dhruv, first of all, the new capacity expansion 100% utilization will be reached by third quarter of next year, right? Second thing is this EBITDA margin targets we wanted to remain at this level, same on that level, because what I have just told Subhadeep is that covers up the advantage what we will be getting from the backward integration side.
Okay.
Yes, just to add up in that will basically give me the more advantage on my console numbers.
Okay. Fine. On CRQ side, you said you are in the advanced stage of discussion. So what kind of capacity it would be having? That is, whether we would be able to fully use this capacity for internal use, like we won't be purchasing from outside, right, sir?
Through the capacity this unit has got is around 25,000 ton per year, right? At present, for the next year, I have my requirement of around 17,000 to 18,000 ton. So whatever my requirement will be there, which will be done from this place, and balance we will be selling it to the RPOs because there are huge demand of this. And top of that, as Chairman Sir has just told you, this is the finest facility of this country. So this and it has got all approvals in place. So definitely we would like to take the advantage of that. In this also, I would like to add up one more point is that for the maximization of this facility and to take the advantage of the present situation, we have already tied up with the electrical steel manufacturers for next 3 years. So on the electrical steel side, our next 3 years requirement is already tied up with the reputed mills. I would not like to disclose the names here. So on the raw material of this product is being tied up by completely. And apart from that, on the copper side also, we have already tied up with the reputed people, with the companies. So next 2 years, copper requirement is being taken care.
Okay. Fine, sir. And sir, last question I would like to ask is, how is the demand outlook on the IDT transformer side, and what kind of margins are there in this as compared to the power transformer? As going ahead, your focus would be on power transmission, or it would be on this distribution transformer, seeing the huge demand due to the renewable energy, and on socket connected transformer and SATCOM transformer, how do you see the demand outlook, sir?
Dhruv, IDT transformers are different than power transformers. IDT transformers are huge in numbers, and there the margins will be less, but the cash flow will be much better than in the power transformers because it is all in cash. And so we get the payment, full 100% payment before the transformers are delivered. As soon as it is tested, we get and there is no waiting period in the sense that after the transformers are ready for dispatch, they immediately lift it because it is the whole project waiting for the transformers to be shipped to the site. So the margins will be little less as there are many players, but because of the quality issues, we are getting the preference, and we get 1% or 2% more than the other non-regular suppliers or the large suppliers. As far as the power transformer are concerned, there is a huge demand. Statecom also transformers for the Statecom are also required in plenty, and then we are getting approved by the utilities there. And the Scott connected transformers, which are mainly used by the railways, as far as I know, our design is approved by railways, and we have already got the orders for.
We have the orders.
We have the orders, but we have to give one transformer. We have to get one transformer tested, so that has been done and it is approved. So now that revenue will also be open for us, and the demand is going to be huge for the railways, as mainly because all the railways, the entire railways, they are increasing the speed of the trains, and when they are increasing the speed of the trains, the power requirement is more than what it used to be earlier, and so they have to replace all these transformers, and that is where these Scott connected transformers are in the picture and are in the demand.
So sir, in your current order book, can you just give this breakup of IDT transformer, Scott connected transformer, and the SATCOM transformer? What kind of order book?
Dhruv, we would not like to disclose all these things at this forum. If you want, you can connect it to me. I can provide you the details.
But sir, just last one thing, going forward, are we seeing any huge orders from this SATCOM or Scott connected transformers, seeing the huge TAM that is having in the railway?
In coming quarter itself, we are expecting this.
Okay. Thank you so much, sir. Good luck.
Thank you. The next question is from the line of Sukant Garg from Equable Research. Please go ahead.
Hi, thank you for giving me the opportunity. My question is basically regarding the order book. My first question is basically regarding the order book. Could you please bifurcate from which major sectors we are receiving this order book from? As you have mentioned, there are many sectors in the PPT.
Sukant, basically, if you see my investor presentation PPT, we have clearly mentioned that my present order book is around 46% is coming from the industrial customers, 11% is coming from the state transcos, and balance 43 is coming from the central utilities. And we talk about the central utility, it is majorly basically the power grid, which is from where we are getting the orders.
Okay. Thank you, sir, for that. And secondly, my second question is, when you say that we have a order book 3,500 in hand, 3,500 crores in hand, and we have already got 1,031 crores of new order inflows, that makes it 4,500, I believe. And by what time we expect the delivery to happen, a maximum time of this 4,500 crores?
The 3,500 crore rupees order, what we have is the delivery time of these is the next 15 to 18 months time.
Okay. And for this 1,000 crores?
Which 1,000 crore?
The new order inflow of Q1. Is that included in that 3,500 crores?
1,500 crore rupees order book includes the 1,000 crore rupees order also. The order book of 3,500 crore rupees, what we have as on 30th September, will be delivered in next 15 to 18 months time.
Okay. Thank you. Thank you, sir. Thank you very much. That's all from my side. Thank you.
Thank you. The next question is from the line of Ajay Bodke from Pedigree Advisory Private Limited. Please go ahead.
Congratulations on posting impressive set of numbers, sir. I have two questions. First is, if I look at the cash flow from operations, there's deterioration from minus 14 crores to around 37 crores. And also on the free cash flow from minus 21 crores to minus 97 crores. By when does the company expect to be positive on the free cash flow front? That is the first question. And secondly, insofar as ROE and ROCs are concerned, what are the internal targets that the company has over the medium term for ROE and ROC? And last submission I have is in the presentation, investors would really appreciate that in addition to the P&L, you also include the balance sheet numbers and the cash flow numbers for the first half and the year-end presentation. That will really be helpful, sir. Thank you very much.
Ajay, first of all, your first question is that we are already cash flow positive on operational level also. Second question is that if you want to see my balance sheet and balance sheet, we already hosted our H2 balance sheet and profit and loss on the stock exchange. You can download from there and also from our website. What was the second question? There's one question also I missed it. Which one was it?
No, in terms of the targets for ROE and ROC over the medium term, what are the targets you have?
My ROC, I think my ROC right now is around 11% level, right? And we have set up our internal targets, and we are actually slowly working on those directions. And last 3 quarters, if you see, last 4 quarters, if you see, slowly the things have been improving on those directions also.
Okay. Thank you very much, sir, for taking my questions and wishing you all the best.
Thanks a lot. Thanks for your wishes.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello, good evening, sir. Thank you so much for taking my question. A lot of my questions have already been answered. So, sir, just wanted to know, like, we have, like, kind of aggressive growth targets. Like, I think you were saying FY26 3,500 crores and this year also 2,000 crores. So, any kind of risk we see, kind of like something that can be a roadblock or, just like, how do you see the environment, like, everything going good, but then is there something that's, looming in the corner that can, hamper us?
Darshil, basically, if I am targeting 3,500 crore rupees in next financial year, it is based on the order book, what I have right now, and the negotiations which are basically going to realize in next coming quarter and or two is based on that. And we don't foresee any risk into that. Second point is that in terms of the long-term risk is concerned, as far as our concern is there and our industry is concerned, next 5 to 6, 7 years, we don't foresee any risk in this industry.
Oh, that's great to hear, sir. Yeah, that's it from my side, sir. Thank you. All the best, sir.
Thank you.
Thank you. The next question is from the line of Yash Mehta from Art Ventures. Please go ahead.
Thank you. My question has been answered. Thank you.
Thank you.
Thank you. The next question is from the line of Ganesh Ram from Unify Capital. Please go ahead.
Thank you. So I'm back. So I just wanted to understand one more thing, right? So we haven't started taking any orders on the IDT transformers yet, right? So
Ganeshan, we are already producing the IDT transformers. It is not that it is a new thing. What I said is that we have not started taking orders for our new facility, which we are expecting from the January onwards. Because our chairman and MD is on a very, very clear, they've given us a very clear direction. Till we have 95% completion of the facility, no order will be taken for that. So that is the reason we have not taken the order for the additional 15,000 MVA, which is going to be start from the early next years.
got it. This is the new capacity where you think you can make about 100 transformers a month and it's fully automated. That one, right?
Yes, yes.
So in the 2,000 crore guidance that you've sort of given for top line, we don't include any numbers from this.
It is not that.
It's not that, right? Okay. And then one more thing I just wanted to understand, right, on the margin side of things was earlier we suggested that margin for the full year would be similar to Q4 of last year, right? But we've already exceeded that in Q1 and Q2, and to sort of hit 2,000 crores, the next 2 quarters will only be stronger from where we are right now, right? So why do we then feel like margin will still end up maintaining at the current levels? What is happening between the top line and EBITDA that we might be missing out? Is it growth in overheads because of the new capacity?
Ganesham, first of all, thank you for reminding me about Q4 and now, and I hope that it is a positive things and positive sign which is happening, right? So you will appreciate it, agree on that, right? Now, coming back to your question, Ganesham, is that margins which are basically we keep disclosing or we keep getting it is based on the delivery of the product what we have in hand. And there are maybe possibility that we might be having some product which may have a little bit less margin. We might be having some product which may have the more margin as compared to the other products. So this margin percentage may vary little bit here and there. And being a finance guy and being a Marwari mentality guy, I would like to be on the conservative side as far as the margin is concerned. You will be more happy that if I tell less and deliver more.
Yeah, that's a good problem to have.
Thank you.
Thank you.
Thank you. The next question is from the line of Surbhi Sarogi from Smith Capital. Please go ahead.
Hello, am I audible?
Yeah, Surbhi.
Okay. Thank you for the opportunity. Sir, my question is, what is the order inflow that you are expecting in H2 and next financial year?
Surbhi, if I want, I can take the order of 1,000 crore rupees every month. That is the vicinity I have it.
Okay.
Yeah.
And sir, can you throw some light on this 18,000 crore order pipeline?
What light you want me to throw in this?
Like at what stage it is and how much out of this do you hope to secure and by when?
Surbhi, these orders are very different levels. Few may be on the very, very advanced level, which may be getting in next quarter time. Few will be next fourth quarter time, or few will be on coming next financial years. But if you see our presence and our expertise side, yes, around 25 to 30% order strike ratio is there out of this.
Okay. And sir, one last question is, can you give some outlook regarding revenue breakup for quarter 3 and quarter 4?
We have, I think our chairman and myself both have told in our speech that guidance which we have given at the beginning of this year will remain intact.
Okay. Okay, sir. Thank you. That was helpful.
Thank you.
Thank you. The next question is from the line of Dhruv Agrawal from Niveshaay Investment Advisors. Please go ahead. Sorry to interrupt you, sir. May I request you to please use your handset?
Better, ma'am?
Yes, sir. Please go
Hello.
ahead.
Yeah. Yeah, sorry. On the green hydrogen project, sir, where the demand is around 2,300 transformers annually, how is the demand outlook on that, sir? And going forward, how many players would be there in this? And from this, how much would TRIL be able to cater from this, sir?
Dhruv, as on today, we are the only qualified supplier for the hydrogen transformers. What is unfortunately happening is all the projects which were expected to start early next year has been delayed, for some reasons or other. Maybe because of the viability or the margins which they expect from that. So the projects are delayed. But we are today the only qualified supplier for the green hydrogen transformers. Green hydrogen or hydrogen manufacturing hydrogen. So they are, the rectifier transformers, and we are the only qualified supplier. There is no competition from India as on today. I don't know what is going to happen because if the availability of the transformer is not there, if we are unable to supply them in time, they may risk with somebody else or they may import it from China. Otherwise, there is no other manufacturer who is today qualified for supplying those transformers.
Okay. So, sir, right now, how is this market right now? Is there any orders coming towards you as you are the only qualified players? And what kind of margins are there in this, sir?
The margins, all these transformers when they come, they will be large in numbers. So you can't expect more margins than what you are getting today. And we wouldn't like to charge more or increase our margins in those transformers to attract other competitors. We would like to keep our margins safe or at a reasonable level so that no other manufacturer can get into. This is what our strategy is.
Okay. So are there any orders pitching into the market, or is it something how is the market outlook on this?
All the projects are delayed. We have supplied some transformers to GE for American market. That's all. After that, nothing has come so far. But it should come any time. Once they are ready with because the project itself will take their own time. The main thing is the converters, which they want, or electrolyzers. All the large players like Adani or Reliance, they want to establish their own plant for manufacturing of electrolyzers. So it is in a very, very preliminary stage, I would say, as far as India is concerned.
Okay, on the international side also there are no such demands or something like that.
So we have started receiving the inquiries, but it is at a slow pace.
Okay.
Yeah.
Right, sir. And just last one question, sir. As we are targeting around 2,000 crores in FY25 top line, sir. So till Q2, we have already done around 800 crores of revenue. So the run rate from Q3 should be around 600 crores. So is it achievable in order to cater for that 200 crores of top line, sir? Is it achievable to have this 600 crores of run rate, sir, from Q3?
Dhruv, basically the production planning and delivery planning, what we do based upon the delivery terms and dispatch schedules. So whatever is the dispatch schedule is there, based on that production planning is done. And we have the vicinity of the dispatch schedule, so based on that we are coming up with that number. And as of now I speak to you, we are firm on those numbers and 100% those will be delivered.
Okay, so we are very confident of achieving the run rate of 600 crores from Q3, right, sir?
I don't think that I said that we will do 600, but I said that we will achieve the target what we are guiding for.
Okay. Sure, sir. Okay. Thank you so much for this guidance on now. Thank you.
Thank you. The next question is from the line of Agastya Dave from CAO Capital. Please go ahead.
Thank you very much for the opportunity, sir. Am I audible?
Yes, Agastya.
Thank you very much, sir, and congratulations on great performance. It's great to see the company really turning around now. Sir, I have just two questions. One is, a previous participant was asking you about capacity utilization. So can you share those numbers for last 2 years and also for the first half? If you have some rough numbers, would do.
Okay. Agastya, in last year, we have actually delivered around 50% of the capacity utilization, right?
Okay.
And this year, we are aiming around 75% to 80%.